Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting Asian Session Live Market Analysis webinar. Let me display the slide. So this analysis is for the week 11th to 15th of June. So we are doing the analysis on 11th June between 5 and 5:45 GMT. So I will try to give the forecast-based, the algorithm-based forecast for today and for the rest of the days in this week. And also we will do the market reading and try to find out what trading strategies we can use in the current market scenario in order to earn money from that of the market. Now, with regard to the market reading, we note down the high and the low set between 2:30 and 3:30 GMT in 4 majors and 2 commodity pairs and use them as the reference levels for the day to identify the type and the sequence of moves they are doing session after session. And we will track all these things using the GMT time frame. So we use only the live market quote page. I have given the link for the same. We use the live market quote page to track the market. So when you want to track the market, first of all, we note down the initial lows and the highs and try to identify the type of moves they could possibly do during this particular day. So let me go to that of the second slide and show you the initial lows and the highs set around 3:30 GMT for today. So you can also see it in the live market quote page. I have given the link, the lows and the highs which are given, whether they have breached the highs or the lows for the day set around 3:30. From there we can identify what sort of moves they could do it, or whether they are going to do only the higher level swings now. Euro, the initial low was 1.2618 and the high was 1.2669. And they are not breached in the live market quote page. You can see that they are trading around 1.263839. And when compared to that of Friday close level 1.2516, they straight away gained about 100 plus pips. And if you see in the net change in the live market quote page, that is explained. So 122 pips positive net change is seen because it is shown in green. So they gained the level and formed the low. From there they gained further levels and set the high, and they are just hovering in between the low and the high. And probably we know that it is a bailout news in the Spain bank system. So as a result, euro has gained. But why other currencies should also gain? So it is pertaining to that of euro. And immediately the answer could be the market sentiment. So the risk appetite has emerged. As a result, all the currencies started showing the USD weakening move. In the case of GBP, 1.5504 is the low, 1.5560 is the high, and currently trading around 1.5554, and within the range they are not breached the low or the high. So it is showing a positive net change of 84 pips. But when compared to euro, GBP is showing lesser positive net change. As a result, you find that euro GBP cross is expected to gain the levels because euro has gained more when compared to that of GBP. Okay, fine. But USD yen is also showing positive net change. USD yen, the low was 79.40. The high is 79.72. Currently market is trading around 79.63.64. The low and the high are not breached, but 17 pips positive net change is shown. So when euro and GBP are gaining, USD yen is supposed to make a downward move in order to make the USD weakening move. Instead, it is showing a contrarian move of USD gaining move. So USD yen, you know that it is often used as a contrarian currency, and it may drop along with that of Euro and GBP on Friday. If you have noticed that when Euro and GBP made the drop on Thursday and Friday, USD yen also made the drop and came below that of 78. And now when Euro and GBP are gaining, they are gaining the levels in the case of USD yen. So this is how they had done the one-sided downward stopping in the case of yen crosses and started gaining the levels. Now in the case of CHF, the initial low was strongly tied 94.80. Sorry for that. 94.80 is the initial low and the high was 95.20, and they are not breached the high or the low, and it is showing about 87 pips negative net change. So here again you come across when Euro has gained about 121 pips, CHF has just dropped only about 87 pips, a lesser drop when compared to that of Euro. As a result, you find Euro CHF is gained the level. Now, in the case of Canadian dollar, 1.0246. Sorry, I think all messed up. 1.0206 is the initial low, and 1.0231 is the high, and they are not breached the low or the high. So here again you come across in a narrow range, USD Canadian dollar is trading and currently holding closer to that of 1.0206, and it is showing only about 53 pips negative net change when compared to that of Australian dollar, which is showing about 64 pips positive net change. Australian dollar, the low was 99.66, the high was 1.0009. So above parity, they set the high, and then they are trading around 99.81, 99.83. So you find that excepting USD yen, all other currencies are showing the USD weakening move with varied degrees. So with the help of the initial lows and the highs, we are able to understand currently they are doing only the swings between the high and the low, but the low what they have set is higher than that of Friday close level, and they are just consolidating between these two range, or the low and the initial low and the high. So that means in the mid-Japanese session, they are making the swings. During the early session, they quickly gained the level and set the high, and near that of the high, they are making the swings, and they are not breach either the high nor the low. So they are making the swings. So when they make the swings, what will happen? At the end of the session, they are expected to make an upward move, because at the higher level consolidation when they do and without breaching the low, when the short sellers come for the short covering, then automatically when they are not covering it fully, or when they go in for a short selling, in order to average their sells, they make further rise and squeeze them to do the short covering. That's what happens. So during the start of the session, they opened higher, and later on they are expected to squeeze the short sellers on the higher side. Then once they do the short seller squeeze on the higher side, then they are expected to make one more gain in order to induce the traders to turn long at the higher level. That is the normal trader's tendency. So when they gain further up, and you know that if they gain about 150 pips net change, and further gains will be limited for the day, but that will give the impression to the traders Euro could gain to 200 to 300 pips for a normal trader, and probably you could go in for a buy in order to book profit during further rise, because when they breach all the resistance and stay above, then immediately it gives the technical indication that we can go in for a buy after the rise. So that becomes the wrong decision, and later on during the late European session, they are expected to slide Euro and GBP using some other news. They are all news-driven moves, and whenever the news becomes released during the weekend, you find start of the week this sort of moves happen in the market. And it is not necessary that the sentiment need to continue. And at the same time, we need not become bullish suddenly. We can objectively view the market and then try to take the positions accordingly, rather than trying to jump into the conclusion here afterwards the entire problem in the world is solved. Because once you feel that the problems are all solved, then they will highlight another problem, and already you come across people are talking about exit. So when one problem is solved, they will talk about another problem, and so it is a sadistic approach, unfortunately, talking one after other the problems and not the positive news. So invariably you find that that may create an alternate sentiments. So players are here to highlight the sentiments from time to time and try to trap the traders. Ultimately, we need to understand that. So the focused algorithm says that these are all the following are the expected market moves for today. The swing and a quick rise, and the rise have already happened, and they are expected to make further rise towards late Japanese session. Then afterwards, further quick rise is expected to happen during start of the European session, and that will give that impression that everybody is risk appetite. So when they make always quick moves, you understand that they are all false moves. Quick moves are false moves in the market. That means what? Whatever they accumulated on Friday, the positions, or last week the positions, they are expected to exit after gaining the levels quickly and allow the market to drop. So those who have jumped into the market at the later time frame at the higher level, they normally keep stop in order to limit the risk. So the players are expected to drop or slide and hit the stops of them and start making the swing and rise moves during that of the US session. So week beginning false move may be seen during that of the late European and early US session for the day, and you could come across more upward moves during this particular week. So let me explain to you what are the expected market moves for the rest of the days in this particular week. Today is Monday. I explained that swing and rise during that of the Japanese session, and a quick rise during early European session, and the slide during that late European session, and swing and rise moves are expected during US session. And tomorrow, 12th of June, they are expected to make an intentional rise of swing and rise, swing and rise, and swing and rise all through the day. And then we will understand that the slide during late European session and early US session of today could be the week beginning false move, because they continue to gain the levels in the case of Euro and GBP tomorrow. Then Wednesday, 13th, they are expected to make either way stop-ins. As you know that midweek they make either way stop-ins, and they are expected to open lower with a downward stop-in on Wednesday and start gaining the levels during that of the late Japanese session and the early European session, and make a quick downward stop and again and hit the stops on the lower side and start gaining the levels during that of the US session, very similar to that of today. And then Thursday and Friday they are expected to make one-sided gains, and Friday you could come across more aggressive gains in the market. Probably we could be able to see that they make the maximum permissible level of 350 pips gain in the case of euro, and about 600 pips is the permissible level in the case of GBP. At least they should be able to gain about 400 to 450 pips. And we will find that the entire market scenario is changed. And till the early part of this particular month, everybody was telling that USD is the safe haven. And as I explained many times, that USD is a sleeping giant. So it will just wake up and just look around and smash everything and go to sleep again. Then afterwards you will find all others will make big gains in the market. So that is how it is expected to happen in this particular market. Let me just minimize the PowerPoint presentation and try to answer to that of the questions. Before that, let me just go to that of the live market quote page and explain to you. Now, in the case of euro, it is trading around 1.263940, 122 pips, and that maximum permitted is 150 pips. Further upside is very limited, but they are expected to gain at least 150 to 175 pips and things like that today, because they want to maintain the tempo. And as I explained many times, that if they gain the levels above or lose the level below that of 75 pips, the reversal does not happen fully on that particular day. They may recover, but they may not reverse. So here, when they gained about more than 75 pips, the reverse is not expected to happen, and many think that probably it will fill the gap later on, but they may not fill the gap. So we have to understand that in the case of GBP, 84 pips positive net change is seen, and so they could gain further up here. And this is a contrarian move. USD yen is also showing positive net change, and because of that, you find euro yen has come above 121 pips already it has gained, and in the case of GBP yen, it has gained about 97 pips. So because of the contrarian move, and also Aussie yen is also on the positive side, because these are all the numerators, euro, GBP and Australian dollar, and a denominator is showing positive net change. As a result, you find all yen crosses making further upward moves. So besides euro GBP, if you see, it has gained about 35 pips for the week beginning, and it has come to about 0.8125 level, and that on Friday it was around that of 0.8067 and 75 level, but they gained more in the case of euro and less in the case of GBP. As a result, euro GBP, they gain. It is a weak beginning false move on the upside, and later on they are expected to gain more levels in the case of GBP when compared to that of euro. As a result, euro GBP is expected to make the slide. Prolonged consolidation is seen in the case of euro CHF, and they are expected to make an upward spike in euro CHF, probably looking for some trigger, and then later on they are expected to do it. Whenever the currency is showing a lesser spread between the low and the high and things like that, avoid taking positions in it, because you may have to hold the position for several days without making money. If the same money is deployed elsewhere, you will be able to make profit. So don't have any sentiments attached to it, any currency pair or the crosses, and don't say simply euro yen is the luckiest currency for me, so I will only trade in this. Don't take a predetermined or conceive predetermined ideas. Instead, you look for great opportunities in the market and quickly enter and exit in a matter of 1 or 2 hours in those currencies which have got a great momentum in the market. So if you are able to identify the currencies which could make big moves in the market and try to bet, then you will be able to consistently earn money. Instead, if you focus only on the currency in which you are interested, if they don't make any move, you become frustrated, even though all others are making money from that other market. So be an opportunistic trader rather than a sentimental trader. A sentimental trader always go with that of the market sentiment, always cling to a particular currency based on his own sentiments or probably based on patriotism and things like that. It is not a place to show all those things. This is a place to show our smartness. How we are able to capitalize the quick moves in the market. So that we need to focus on. And some might be asking about Indian currencies. So USD INR has started gaining the levels now, and it has come to 55.28. It is expected, and it went up to 56 and above and started coming down. You could come across in coming days, it is coming lower levels at a very quick pace. Slowly they are gaining the levels in the case of Euro and also GBP. And late Japanese session is from 5:30 GMT. So then you can see that they start cutting the high and going above. So with the help of the forecast, with the help of the market reading, we try to identify what could be the possible moves, and based on that we try to develop the trade setups. Now let me answer to the questions which are asked here. Okay. Kanan has got a question. Net change is 122 in euro, but high and low show less difference. Yes, they straight away opened higher. So from that high, they further gained, but the net change is from that of the previous day close. So previous day close was 25.17. From there, they opened straight away 26.18, about 101 pips. And then they gained about 22, 23 pips now. But they went up to 140 and came down. So hope you are able to understand. This net change is with a reference to that of the previous day close. And the spread between the low and the high is of the current day. So these spreads, the initial low and the initial high, we need to use as a reference level to find out what they are expected to make as a moves. And I explained many times the type of moves they do it. And if they cut the high and stay above there for more than 30 minutes, then we know that there is a technical trade potency. We can buy above the initial high, and they are expected to gain levels, we can book profit. They make swings between the low and the high, then we can do the swing trade, buy near the low, sell near the high, and try to do the opposite whenever they make the moves during the day from the session start. And if they make the intentional move, it will be a slow cutting of the high and continue to gain throughout the day. If it is an extended move, quickly they will make a downward move or an upward move. So quick moves or false moves in the market. So you have to understand. Opening it at a higher level, it is a breaking news. So weekend, that news came out. So obviously they have to make a knee-jerk reaction in the market. And on 14th, I'll be talking about how the news and events trades are to be done. So I'll be giving a webinar besides Asian session webinar on Wednesday about how exactly the news and events could be used for very quick trading opportunities in the market rather than just afraid of them and keeping away from the market. And you'll come across on that day several speakers talking about the same topic. It will be a very interesting aspect, and how each one is giving a different approach to that of the news and events trading. So look forward to those series of webinars. On Wednesday, 14th of June, you'll come across about 4-5 webinars given, and it will be given by various experts, and you can listen to the ideas and then develop your own ideas how exactly when the market volatility is very great, try to grab the trades and try to grab the profit as well. Then Jack has got a question. USD INR forecast. Okay, please. Do you still think that it may go back to that of 47? Yeah, it is likely to go back. Once it goes below that of 52, USD INR goes below that of 52, you will find straight away the support will be around 47. He'll make a very big hammering on the downside. Ahmed, after Greek election on June 17, can euro go down to 22? I doubt it. This time around, euro is expected to gain the levels. That's what my algorithm says. And so probably the outcome from Greek election could be positive to euro. Probably it depends upon the uh, type of elections, what they are going to, whom they are going to elect, and how they are going to take decisions. And my algorithm says that euro and GBP are expected to make a long-term upward move from here, probably till end of the year. Then shares. I feel AUD may not rise beyond 1.01 to 1.02 range before reversal. So it is 1.0101, a good level to short. Shan, it went up to 1.003 and came down on Friday. Now they are gone to 1.009 and came down. It may give that impression that head and shoulder formation or something like that. And you may find that 1.01 acts as a very strong resistance. But when euro and GBP are gaining more and more levels, Australian dollar cannot resist. It has to gain. Only a lesser gain when compared to that of euro and GBP. That sort of scenario is expected to happen. So they are expected to breach 1.010203 level in coming days in Australian dollar. And when Australian dollar was trading around 1.07 to 1.10, I was telling that it is expected to come down below parity. Now below parity, I was explaining from last month that they are expected to take it higher levels. So I give the forecast beforehand. No, I think the forecast has to be given beforehand. So on that basis only I have given it. So those times were good to do sell and buy trades. Now it is a time to do buy and sell trades in the case of Australia. Then Smith. Why could not be this upward gap opening move a false move? How do you compare? Yeah, that is a possibility. Upward move could be a false move for the week beginning, and that will be confirmed by the moves what they are trying to do it by late your session today, how they are closing it, and tomorrow's move. Suppose if they just gain 150 pips net change level today and stop it, and tomorrow they start opening it lower and come down all the day, then what Smith says is correct, that they made a weak beginning false move on the upside and then start making a reversal on the downside. So we have to find out whether the weak beginning false move is on the upside or the downside by referring to that of tomorrow's moves. And that is only with regard to the market trading. But I use yet another element, namely the forecast algorithm. The forecast algorithm says that it is expected to make further upward move. So we have to keep our fingers crossed and see what exactly the moves are. So still, I give importance to that of market trading. The forecast algorithm is nothing but a guiding factor, and because the market has got a changing scenario from time to time, all the time the market is not having similar release of data or similar conditions. So when the conditions continue to change, the volume is one of the conditions, the number of brokers and the type of moves made by the players, etc. The conditions continue to change. And when the conditions continue to change, the market dynamics also continue to change. That is why many people start using the dynamic aspects of the market for market reading. So my forecast algorithm says that it is expected to make upward move. So And an interesting aspect you would have noticed last week, which was displayed in FX Street, that all the speakers in the ITC conference, they don't follow the conventional analysis. There was a remark from 2007, what the experts who have been delivering, they are not using the conventional statistics, and they just do a tangent analysis of the market and try to grab profit. So you can understand that when you follow conventional statistics and conventional analysis, then we are going to be part of the herd and get trapped based on the fundamental news and the technical news. Ultimately, we have to go in for a smart way of analyzing the market, and one such mechanism is my algorithm and trying to give the forecast using that. So there are others who are going to present it in ITC conference, and probably you can get the information. Probably it could be recorded and displayed in FX Street later on, and you can listen to that and find out how they are trying to perceive the market with a different approach from time to time. So ultimately, perceiving the market with a different approach is very, very important. And if we think what is visible is true, we'll be trapped. In cricket, what about the Euro Australian dollar this year upward? Yes, this year upward. Then Smith, you are not expecting any USD gaining move, that is 200 pips move in the coming days, week. No, I am not expecting a big USD gaining moves, and already they have done it and overdone it, because when the traders were holding the long positions in Euro and GBP, and they did not find any other mechanism rather than dropping it further down, simply highlighting the great exit, Spain bailout and things like that. And those who have been holding the long positions at 1.23 and 1.52 and things like that, they induced them to liquidate the long positions, accumulated all the long positions. It is nothing but the stretching strategy. So they continue to stretch. So you cannot withstand. You cannot withstand the pressure, because our equity will erode just like that. So anybody who is strong enough mentally, when equity is eroding so much, you will liquidate the positions and accept a very big loss rather than accepting a loss when it is very small. And many people, because of laziness, avoid using the hedging strategy. And they think that hedging is something, a miracle that they have to perform. It is not at all like that. So when you are able to change the market sentiment, depending upon the market sentiment, suppose on Friday you are bullish and willing to sell euro, and on Monday you have become bullish and willing to buy euro, that means you have changed your mindset according to the market sentiment. And you know that there are two types of traders in every time of the market. One will be looking at the market as a buy and sell opportunity. Another one will be looking at the market as a sell and buy trading opportunity. So when the position is hedged, you have got both the positions. You can perceive the market as a bull and perceive the market as a bear alternatively, and evaluate the market. And so if you find it difficult to evaluate with the two different perceptions, then you find hedging becomes difficult, and you feel all the time that you are struck with the hedging. Otherwise, hedging is a real tool which can prevent your equity loss. Suppose when they are making a drop, quickly you can hedge the market and allow them to drop anywhere they want. You let them take euro to parity also, no problem. And later on they have to come up. At that time you can stop out their entry and continue to trade on the upside. See, that sort of understanding is very essential in order to survive in the market. And if you think that No, 30 pips stop is too tight. Let me keep 45 pips or 70 pips, 150 pips or below the support level the stops. And these sort of analysis is not going to help anybody for that matter. And similarly, risk reward ratio. So I'm taking a risk of 100 pips, the reward is 300 pips, but they may give the risk first and may not give the reward later. You may not be having the position to take the reward. So ultimately, that sort of perceptions are all nothing but misguidance, because you have to manage the equity first of all. So theoretically I can talk so many things, but practically as a trader you have to look into that of your equity, and the equity has to grow because it is a hard-earned money, and that has to be carefully handled, and without investment you cannot make money. So use the equity as an investment, but not at a risk of your equity. You have to take very limited risk. For that, hedging is the only option. And still people think that if you use hedging you do not know how to trade. No, these are all the ways. No, they make a high sounded words or high sounded or high syllable note. They try to make it and publicize in the market. And if you want to use hedging, that means you don't know how to trade. And this sort of things, when they make in a very loud way, people think that is true, because they can just highlight even a wrong concept by that way. When they emotionally discuss in a media and things like that, people tend to accept such sentiments. So it is one such scenario. But ultimately for the traders, the hedging is the only solution in order to sustain such big volatile markets. Then Scooty. How much dip is expected before rise in euro? They may just make a downward stoppment below that of the low during that of the late European and early US session. You look for such moves and try to take it. Okay. Then Desmond. Are we expecting USD CHF to parity soon? Yes, USD CHF is expected to gain the levels. Now it is sustaining 95 level, and you just refer to when euro was around 1.26 where CHF was last month, and now where it is. If you just carefully look into that, you'll be able to understand how they are trying to make slow moves in the case of USD CHF, and they finished the downward stop in the case of USD CAD and come above that of the parity. And in the case of CHF also, they are expected to bring it to that of the parity soon. Probably by end of this month, we should be able to see that. Okay. Do you hold GBBN overnight? And you know that overnight interest charges are very high in the case of the crosses, and also the spread between the bid and the ask is also very high. No, spread between that of the bid and the ask is also very high when compared to that of the majors. So if you want to hold and do position trade, you have a different trading strategy. So you have a different trading strategy, because see, you have to pay more for the spread. You have to pay more on the overnight interest. Beyond that, you should be able to earn. Only then you can hold the position overnight. And it depends upon your equity size. And if your equity size is very good, then you can hold the positions, because you know that always after making a downward stop in the case of Euro, USD, and GBP for 2-3 days, they are expected to make 2-3 days upward move in the case of Euro, USD, and GBP. You can simply take during such drop below 100 in the case of Euro and below that of 122 in the case of GBP yen, and try to hold it for 2-3 days and book profit after the gains. So that sort of trading strategies you can do. And trading in crosses is totally different from that of the trading in majors, because in the case of majors, the volatility moves are part of the game. They have to make the upward and the downward move alternatively. Whereas in the case of the denominator currencies, and the crosses, they can continue to make one-sided move. They can continue to make upward move for a few days. So you have to understand the difference and try to trade it. First of all, understand the behavior of a specific currency. Ultimately, what is the behavior? Means the way in which the players handle those currencies, you need to understand. Because they focus more on Euro and GBP and less on the rest of the four currencies. Because the volume is relatively high in the case of Euro and GBP and less in the case of the other two majors, USD-Yen and USD-CHF, and also the two commodity pairs. So when they wanted to make a volume gain, then they have to focus on Euro and GBP and try to create the market sentiment. I said many times, GBP is the market sentiment creator. On Thursday and Friday, when they came below that of 1.53, GBP extremely created that market sentiment, a bearish sentiment, and they were able to easily buy when the traders are liquidating their long positions at the lowest level for the season. So they create the sentiment and trap the traders. So you have been witnessing it again and again, such scenario. They are not changing these. From the time I have been in the market, for nearly about 12 years, they have not changed their strategies. But still, people find it extremely difficult to understand their strategies. That means there is no willingness to accept the reality. The next, Ahmed, which pair is good for hedging against Euro? Now, when your platform does not have the hedging facility, then what you have to do is you are taking a long position in the case of Euro. So Euro is the numerator. It has made about 128 pips positive net change. Then wherever you come across Euro as a numerator, like Euro Yen or Euro GBP or Euro CHF, that could be used as a hedging. But Euro CHF, they are consolidating, not big moves at all. Whereas Euro Yen, they are done 124 pips positive net change. It is almost equal to that of Euro positive net change. So whenever you come across a cross which is having equal or almost closer to that net change, there you can keep the hedging order. Suppose Euro Yen is trading 100.67, about 50 pips below you keep a hedging order. That is 100.17. You keep the hedging order in order to limit the risk of Euro buy. So if you want to hedge Euro and the hedging in the same currency pair is not permitted in your platform, then choose the currency pair wherein Euro is the numerator, like Euro Yen, Euro GBP, Euro CHF, and Euro CAD. Look into this, and where you find a similar net change, here it is 123 pips, and rest of the Euro crosses is hardly 5 pips. It is 34 pips, and next Euro CAD 57 pips. So 57 pips means when Euro is making a drop, Euro CAD may not rise that much in order to limit your risk. Euro CAD may not drop that much to limit your risk. So invariably you find that your equity gets continue to erode. The basic idea of using hedging is to avoid equity getting eroded from that account. So nowhere you find that Euro is making such a big 120 pips positive net change. So when it is showing 124 pips negative net change, you can just keep a buy above that of the market as a hedging. Say for example, if you are taking a Euro buy position and you wanted to keep a hedging order, then what you have to do is above that of USD CHF, 30 pips above that of USD CHF, you have to keep a buy limit order. So that if Euro drops, USD CHF is expected to gain. But unfortunately, you find that when Euro has gained 128 pips, They just dropped only 93 pips. So when you are using a denominator currency, you have to do, if it is a buy and sell trade here, in the denominator currency also, it will be a buy stop. So that you have to logically understand. Don't do wrong trading. Okay, how much equity is considered sufficient to trade crosses? Unless and otherwise you have about $20,000 and more, it is not advisable to take positions in crosses. If you are a scalper, then any is enough, because you are just taking 100% risk on your equity and trying to scalp and trying to earn. So there is no limitation. But if you want to do sensible trade, protecting your equity, so at least you have to have $20,000 to $30,000, and that too you can take only one mini lot at a given time and try to book profit, and later on take another position. That sort of trades you can do it. And platforms might say that you can open account with $200, $500 and things like that, and I can guarantee that that account will be wiped out as early as possible. And don't be carried away by that. Then Scooty. For 2000 equity, how much lot size is safe? Either micro, mini, no thinking of standard, and you can only think of micro with 2000, and that too, many of the traders trade without a stop. If you are using stop of 30 pips, then probably you can take one mini lot at a time. But if 2-3 times, if you are stopped out, then you will be demoralized, because ultimately, you think of earning money from that market rather than trying to perfect a technique which is not at all successful in the market. That is using the stop. Because we know very well the players are stop hunters. And in what way you can perfect it using a stop? So you can keep 10 pips stop or 15 pips stop, 20 pips, 100 pips stop, and they are here to hit the stops. So in what way you can determine the lot size? And normal condition could be 1% of your equity can be exposed at a given time, so that it can avoid margin call. But at the same time, if you choose a wrong currency pair like USD yen, or if you choose a wrong currency pair like ECHF, hardly they make about 5-10 pips. Some people think that Euro CHF is making only about 15 pips. So when you have a very minimal equity, we can try to take the position in that and aim for 5 pips, 5 or 10 pips profit. And that is a very wrong approach, because you try to trade without a stop with a very less equity, and you know that last fortnight or so, they made a very quick upward move in the case of Euro CHF for about 70 pips and then dropped again. Your account will be wiped out because you won't be having a stop to limit the risk. So they know the trick, how to trap the traders. So it is mandatory for us to avoid getting trapped, rather than thinking all possibilities like I am going to be only an intraday trader and things like that. You can just convince yourself that I am only an intraday trader, I am a disciplined trader, I will keep stop and things like that. When they try to hit the stops 2-3 times, you will tend to trade without a stop, because as long as you are human, you are bound to make such mistakes. Let me go back to that of the PowerPoint presentation. So with regard to the initial lows and the highs, they are not yet breached the low or the high. In the case of GBP, they are breached. In the case of GBP, 1.5660, they are just made 1.5560, 1.5565. They just breached in order to create the market sentiment. And rest of the currencies, and Canadian dollar, they breached the low by about 4 pips. Australian dollar, they have not done it. It's flickering, sorry. So hardly they had just made small upward stop and then making continued USD weakening move now. So they are expected to rise during that of the late Japanese session. Afterwards, quick rise is expected during European session. And then late European session and early US session, there could be a slide and create a different market sentiment and start gaining the levels again. And in this week, more of a gain and less of downward moves are expected in the market. So on Thursday, I'll come back again and review the calls or whatever the expectations I explained it based on the forecast algorithm, and try to read the market for Thursday as well as the Friday, how exactly the weekend closing could be. So I take this opportunity to thank FX Street and all you people who have come here to listen to my webinar. And we'll meet again on 14th Thursday, and most probably I'll be giving two webinars on that day, one with regard to that of Asian session by market analysis, another one with regard to news and events trading, which is going to be a special series of webinars by different experts chosen by FX Trade. So see you on Thursday. Until then, bye. On a daily basis, I'll be giving the forecast in my blog. You can just listen to that or view that and understand how the market moves could be. Thank you, one and all. See you on Thursday.